The Kiwi, who took on one of Australia's highest pressure, highest profile jobs, stepped down today after 6 years as head of the Commonwealth Bank. During that time, Ralph Norris has been lauded by investors, abused by the public and attacked by politicians. Last year's infamous Melbourne Cup Day interest rate hike above the Reserve Bank's rise earned him lots of hate mail, but his safe pair of hands have lifted the bank's performance. Philip Lasker caught up with him as he began his last day at work.
Well, Ralph Norris, you've done a lot to lift customer satisfaction levels at the bank, improve productivity. What's the unfinished business?
Well, Philip, I think as far as customer satisfaction is concerned, we haven't quite made it to number one. We're very close, and so from that perspective, I leave without that quite completed. But other than that, I leave pretty satisfied.
Households are deleveraging and global turmoil offshore. How do banks grow in this new environment?
Well, I think that's a case of being very good at sticking to your knitting and making sure that you're as efficient as you can possibly be. Growth will be more muted over the next 2 to 3 years, but I would say that long term the Australian economy has got very good prospects, obviously with the linkages back into Asia.
You've spoken a lot about the turmoil in Europe. What is it specifically that causes you most concern?
I think it's indecisiveness. If you look at the European politicians, they just don't seem to have been able to get ahead of the curve as far as what the market expects in regard to resolution of the European problem.
Could we see a credit crunch here?
Well, if things got really bad and you saw a situation where there were defaults and the Euro zone broke up, then I think that you could see issues that would cause defaults, which would cause credit issues, internationally, and Australia would be caught in the backwash of that.
And how likely do you think that scenario is? It's not that far-fetched, is it?
Well, I don't think it's a far-fetched scenario, but I think the fact is you're starting to hear slight changes in rhetoric coming out of Europe, which may be the first signs that the reality is that some decisiveness is going to be brought to bear.
Credit ratings agency Fitch recently upgraded our foreign debt credit rating to AAA, but they highlighted the fact that Australia's relatively sensitive to external financing shocks, and part of that is the banking sector, which is heavily reliant on external debt. I mean, how vulnerable are we?
What we've seen over recent times is the banks have obviously reduced some of their dependency on offshore markets, particularly in growing their business. So the growth of business has been more than covered by the growth in local deposits. But we still do have a significant pool of funds that are borrowed from offshore and could be impacted as far as the cost. I don't think availability is going to be the issue because Australian banks are well rated. Australia is well rated, as you just pointed out, but there is a vulnerability there that could see us end up having to pay higher funding costs.
But are you of the view that what's going on in Europe is having a serious impact on confidence here?
Well, it's having some impact. I think at the moment, all of the banks are not in a situation where they need to go to the funding markets. They've built up large pools of liquidity in order to give themselves protection against having to go into the markets at this time. The issue for us is, though, how long does this last? If there's a resolution, then the situation solves itself. And I would suggest that it's really what happens over the next week or two is going to actually determine whether or not the Reserve Bank moves to cut rates.
How long, in a general sense, do you think our banks could hold out?
Well, I think all of the banks are in a situation where it is some months, and it depends on the underlying demand for loans, which would speed that up or even slow that down.
And of course, there's been a lot of debate about the surplus. How important is it to deliver a surplus next year?
Well, I think that all good economic managers, governments that are good economic managers, should be aiming for a balanced budget and a surplus, if possible.
But how credible is it to forecast a surplus next year?
If the European situation is solved, then I think that that's probably a likely outcome, given the projected GDP growth numbers that are being forecast for the year ahead. However, it doesn't take much to knock that off offline, and if that does happen, then it is likely that we won't see a surplus. Does that change the underlying assessment of the Australian economy? No, I think that if it slipped 1 year, I don't think that that's going to be the end of the world.
Ralph Norris, thanks for joining Late Line Business, and good luck for the future.
Thanks very much.